Let's also talk about, one space that has had, and I wanted your thoughts on this as well. One space that has had a really strong move in the last couple of days and weeks, right? It's this whole manufacturing theme, India manufacturing for the globe. And I want to talk about it today because Dixon Tech was the big mover in this week. In case you missed out on it, a lot of Indian companies are getting a larger seat at the table when it comes to manufacturing for global peers, right? Dixon Tech is now up 35% this year. As we know, they manufacture modules, display modules for mobile phones, and now they're working with almost all the large global players, whether it's Xiaomi, Realme, Motorola, etc. A couple of days ago, the company told us that currently they're manufacturing 7 million display modules for smartphones annually. That could rise to 30 million in FY25 and 45 million by FY27. That's the kind of scope that they see. And they're also in talks with other large global mobile manufacturers. CLSA, in fact, raised the target price on Dixon Tech to 9,000 rupees. Now, other examples of Indian manufacturers, for global players include Exide, where they recently won a deal with Hyundai and Kia. Bharat Forge has also spoken about how they aspire to be a global artillery house, with 80% of their defense business being in the export space. So, Kenneth, Motilal Oswal put out a note recently where they said that global manufacturing hub, India as a global manufacturing hub, is a big theme across sectors, whether it's semiconductors, electronics, automobile, EVs, aviation. But in this space, a lot of these stocks have run up already. Where do you still see some potential?
Whatever you do at this point in time, right? Any of these businesses, my sense is that you'll have to give it a time consolidation before you see the next up move. Because the prices represent a lot of earnings which is to come still. Yeah. So you still have to demonstrate your capabilities of generating profitability from whatever you're doing. And in an industry like this, when your capital employed or your investment is increasing at a very fast pace, the returns take some time to come through. Okay. I'm undoubtedly, I've got no doubts that all of this are very large businesses, but you should have been in this space about 3 years back.
Yeah.
Okay.
Exactly.
So the way to think about manufacturing in India and chemicals came up, and I mentioned pharmaceuticals. This is also manufacturing. This has also got PLIs. This is also the space that it's in. So what's going to do well in 26, 27, 28? Okay, for the same segment of the market to do well in the next 3 years, there's got to be a dramatic change in execution now. Okay, there's got to be a dramatic change in execution.
So are you saying it's too late
else.
to get into something like a Dixon Tech if you missed out on the rally?
I'm not saying that. The expectation is I'll generate the same amount of return. Yeah. There's a difference in it. Okay, I'm not bearish on the opportunity. I'm probably a little apprehensive on the quantum of return that you can generate at this point in time. There's a difference between the two.
Okay, all right. Okay. Actually, we've run out of time, not out of questions. Sure. But thank you so much for joining us here in the studio. It was a pleasure. And of course, we have a very hectic weekend. We're trading tomorrow.
Working
tomorrow. And we're voting on Monday. Right?
And we are watching Manchester City win the title on Sunday.
Yeah. Well, don't jinx it, Anuj. But okay, with that, it's a wrap on this edition of Editors Roundtable. More news and updates continue right here on CNBC-TV18.